I hope you can see my screen now. Can you see
Yes,
my
please.
screen?
Yes, please.
Hello.
Hello, sir.
Hello, sir.
Yes, please. Hello, sir.
Please, can you hear me?
Yes, we can hear
Yes,
you.
please. We can hear you clearly.
Please. Hello.
Hello, sir. We can hear you. I hear you.
Can you hear me? Can anyone
Yes,
hear me?
sir.
Please, we can hear you.
Good evening again. Once again. Can you all hear me now?
Yes, please.
I think I'm having network challenge.
Yes,
Okay.
please.
So I think now we can let me share the slide so that we will start. Then others will join. So far, I don't know the total number. If the cost rep are here, cost rep, can you help me with maybe the total number I should expect? Like accounting. How many are you? Do you have any idea? Management to how many are you? Can you give me that information before I start? Hello. Did you hear what I said?
Yes, sir. Please give me a minute, please.
Okay, just give me a hand. Just give me.
Okay.
I want to have just a fair idea about how many are you.
Okay. When I check the WhatsApp group, we have
Uh-huh.
both accounting and management. We have 51 members there.
51.
Yes, for both accounting and management.
Okay. Then it means that we are supposed to be
But
more here by now.
but we have the admins here too. So I'm sure it'll be about 40 something.
Okay.
Yes,
Even
please.
even with that, and now how many people are on? Now we are not even up to half of it, right?
About 11 people here now.
And that is not encouraging.
Yeah, it's not encouraging.
That's not encouraging, because if you are about 50, we let's assume that it's 40 and uh 40. Even 40 crab, we are not even up to 20.
Some people are complaining in the group that they are finding it difficult to join. So we can start. Maybe they'll join later, or we should wait for them again for some time. I don't know.
Really? Okay. So so we cannot also. So I think it is this lesson. Normally the lessons are recorded, right? I know they are recorded.
Yes, please.
So because of that, we can start, and maybe they will join as we go on.
Yes, please.
All right. Okay. So if you join, then you mute your microphone, unless maybe I ask you to talk or you want to say something. Make sure that your microphone is muted so that we can have this class simple. Yeah, I'm sharing a screen. Can you see the screen I'm sharing? Is it showing?
Yes, please. It's showing.
Please.
Good. So
Yes,
like
please.
now let's start. So like I was saying last Saturday, um, sorry for the inconvenience. At least maybe we should have done this Saturday morning, but because of one or two things, we have to reschedule to this. I'm praying that next week, this Saturday, I'll be able to do it at exactly 7 a.m. so that we will not have evening lecture. But as the thing has been always, there are some times after the evening lectures, you should prepare yourself for it. It's not going to be always, but sometimes, once a while, when uh, um, the system becomes difficult, or maybe the situation becomes so difficult for me to meet you during the Saturdays, you have to maybe reschedule one of the weekdays. And normally the weekday we all agree on time that we think, or time that we know that we have off. So yes, principle of accounting. And I know most of you have done accounting before. And because of that, there's one or two things that you know already. So, and I know some people too, they say they have not done accounting before. And we are all going to learn it. I know we are going to make it. So, by this is what I'm trying to cover. I'm trying to maybe by the time we finish, you will know what accounting is definition, then the distinction between bookkeeping and accounting, then purpose, and all these things. This is what we want to just achieve by way of objective. So let's look at definition. Let's try and define accounting. When we talk about accounting, we have been hearing the word accounting. And I might say that because this evening lecture, no matter what I do is that it's not necessarily you have to do all the 4 hours. No. Sometimes after accounting, we may decide to do maybe 2 hours, and maybe Thursday or Friday we do another 2 hours. So Sometimes I may not do the 4 hours straight, but we can break it down to different days. Sometimes we can do all the 4 hours. So let's move on and see. Can I move on? I hope you are hearing me clear.
Yes, please.
Okay. If or if there's something that maybe someone want to bring it to my attention before I move on, we can bring it. Let me give the floor before I start officially, because we are just starting. No concerns, right? Okay. Good. Now, accounting, what is it? When I talk of accounting, we are saying that in its simplest term, it is the art of collecting, analyzing, recording, and summarizing, then presenting and interpreting data expressed in terms of what? Money. It's very, very important. So when you are defining accounting, it is the art. I was saying the art of collecting. That means when you talk something be an art, it means that's a way of doing something. And in accounting, we collect data, then we analyze the data. Then in accounting, we record, then we summarize, we present information, we interpret the information or the data. And not every data that is recorded in accounting. In accounting, there are a lot of transactions, there are a lot of events that happen in organization, but we cannot record all transactions in accounting. Only transaction that can be expressed in terms of money. So if the transaction is so important, but we cannot quantify it in terms of money, we cannot assign monetary value to it, then that one is not recorded as accounting information. I'll give you an example. And that accounting information, all accounting information or data help management and other interested parties to make an informed economic decision. So accounting data is for decision making. So we give you a budget figures. Last year the sales was this, and this year there have been an increase in demand. Therefore, it's likely that the sales is going to increase by 10%. This data financial, and if the sales increase by 10%, then we calculate 10% of the sales. The sales is 100 million. So 10% of it, then they're likely to get a profit. So do this analysis for the person. Oh, okay, and this data is very important. To mean that by the end of the period, I can get a profit margin of maybe 10,000. Therefore, you can now adjust your living and that. So it's accounting information help management and other interested party to make decisions. I was talking about the fact that when we take an organization, a lot of events takes place, but the event that cannot be quantified in monetary terms. Either the transaction is such that you cannot assign money or you cannot quantify it, you cannot value it or express it in terms of money, no matter how important it is, you don't record it. For example, let's assume that one company, you have a company where the manager of the company, maybe within a year, or was supposed to go and meet some board, a group of people for a sign of a contract. So today is Monday. Let's assume that the manager of the company has been scheduled at Thursday. We are all meeting at a club. Come and sign a contract. And this contract, the manager is able to go and sign it. The company will get a profit of about 20 million Ghana cedis from that contract. So this is a huge contract that can turn the fortunes of the organization. Now, Thursday, when they are about to go for the meeting, the manager was sick to the extent that he couldn't attend the meeting, and therefore the company eventually lost that contract. Now, this is an event that has happened. It is something that has happened negatively or it has affected the finances of the company negatively. But because we cannot quantify sickness in terms of money, when we are listing expense or when we are recording accounting transaction, you will not see anywhere like sick manager sickness 20 billion or 20 million. You can't do that. But the manager's sickness is an event that has caused the whole organization to lose that sum of amount or 20 million Ghana cedis. But sickness cannot be quantified. Sickness cannot be expressed in terms of money. That was somebody was sick. And that's the sickness is 20. No, it's not possible. So that information, even though it's important, you don't record, you don't see it in an accounting record. That is why. So when we talk of accounting, it's the way of doing things, collecting data, analyzing the data, recording. So normally we say accounting is the act of recording, classifying, analyzing, summarizing, and presenting financial information for that can be expressed in terms of money for economic decision making. That is all. So you have to understand the various key elements in the definition of accounting. What do you mean by record? Recording means we document, you are writing. So in accounting, we write, there's a recording. There's what we call class analyzing. You have to analyze the data transactions. As we move forward, you understand that there are various data, you have to group them, classify them, analyze them. This is debtors, or this is debit, this is credit, this is cash sales, this is credit sales. This is a liability, this is an asset. You need to do that kind of classification. So when you are recording transactions, you group assets together, you group liabilities together, expenses and income. This is what you call you analyze. You analyze transaction and classify them into their correct type. And summarizing. When you are defining as accounting, there's a need for you to talk about summary. It's very, very important. Summarizing. Accounting transactions are always summarized. So when you take the trial balance, you see purchases, let's say 20,000. That is a summary. You see debtors, you see sales, one figure. That it means that the information has been summarized. Because when you take a supermarket, or let's take a Crown Mall or take any mall, a day, the kind of sales that they make in a day, people go there and buy a tablet and buy pastries and they buy a lot of borrows of items. So if you are recording account, they are accounting they express in terms of money. Sales. Now if you are to record all the individual sales in the book, in accounting for us to know that, oh, Ben came to buy pen, 50%. This one bought a tin of milk, 10 cedis, and you are recording all the sales that you made in the. Can you get book to do that? No. So in accounting, what we do is that at the end of the day, or at the end of the month, or at the end of the year, all the sales are put together as one figure. So you see sales. Then that is what we make with summary. But when you go into that sales, you will see that there are about hundreds of people who are individual items that are bought, which have been put together as well. That is the meaning of summarizing. So accounting data are summarized. We don't sit at the supermarket and say, when we want to write sales, let's say somebody came to buy one pen, one blade, chain of milk, sugar, everything. You list them one in the accounting. No, we don't do that. All those things are collectively called sales. Put everything together, one figure. Please, are you with me?
Yes, sir, we are with you.
Okay.
Yes, please.
I had to be sure because sometimes these online classes, when you are doing and you don't know it, people, as I was teaching postgraduate students, whilst it's around 4:30, I was teaching like this. I was talking, not knowing that people are just in their kitchen. Some lady, I don't know, she forgot to off the camera, so I was watching. Maybe child no, or here is stew, money kunu. So if you try general kugum, shit, no aba, no abeti, I cannot go for you. No afa pepper, no, or yes stew, or cover something. Hey madam, this stew there, I'm preparing with you. I say, sir, I'll eat some, sir. So you see, sometimes because you can't see, because we can't see, people can do anything, but I am hopeful that you are just listening. So that is accounting. So the slides are with you. It is not everything that I'll talk about, but I'm just presenting in such a way that you understand, or when you read, you understand what you are saying. So you see, we have done the accounting as an art. Accounting involve using skills and creative judgment in various stages in the preparation of financial reports. So there are stages. So when you look at the definition that I gave, this is all what accounting is about. The definition. So when you are defining accounting, you need to define it to center around this, that the stages in accounting process. This. So you see that collection of data from the source. Collection of data from the source document, then you analyze it. I talk about how to analyze data. Various transactions are analyzed. As you classify them, group them. Because the transactions, so I can give you transaction and ask you to say that group them, classify them into credit sales, cash sales, assets, liabilities, and the rest, income and expense. That is analyzing transactions. In accounting to recording. Recording simply means documenting, writing the items in a book, and summarizing. I've talked about how to do summary. Summarizing, you compress the data in such a way that you will not lose the salient point in the information. Then you also interpret the results of the information. So that's accounting. So when you hear accounting, it's not any difficult thing, but just collection of data to make the collection of data that can be expressed in terms of money or financial information to help interested parties and management to make an informed economic decision. That's all accountants are. So as I go on, if there is question, you can just um, draw my attention and you ask it, then I'll answer you. So yeah, yeah,
Doc,
good. Yes.
Doc, please, some books describe accounting, the definition as a process. Others also describe it as an art. So the art and the process, are they the same thing?
Good. So you see, accounting is the art of recording. Accounting is an art. That is a way of doing it, and it's also passed through a process. But when you talk of the definition of accounting, you know that we go through a process. So in most cases, people can say that accounting is the, so you see the stages in accounting process. So it's a process in which the art is displayed. So you pass through a process. It's not, when you say something is a process, it's not that one software, one inventing. From one say go to this, you go before you get to an end. But in the process, the art is displayed. So yeah, if you say accounting is the process of recording transactions, classifying, analyzing, and summarizing, you will not be marked down. It is correct because it's a process. And in that process involve the art of recording. Classified. So the art here that is somebody, is a human being. It's a way of doing things. That's art. I mean, somebody had to do this process. Accounting is a process. It's involved processes. But that processes, somebody had to do that. And that's why we say that it's an art of doing something. Is that okay?
Thank you.
Okay. Any other question again? Or we can move on. Okay. Either no more question, then let's move on. That's accounting defined. Please hold just a minute. Okay. So sorry for that break. Let's continue. Yeah. So now now that in your own way, if I ask you to define accounting in your own term, what will you say? How will you define accounting in your own way? Yes. I can see Mark Ofori. Mark, I can see you. And you have dressed as an accountant. That is good. So yes. Your microphone is off. So will you all the time just let me know how do you understand if all the time how do we say accounting? So ask you to your microphone is off. So unmute it. Unmute it. We can't hear you still.
Hello.
Yes, go ahead.
Okay. I would say accounting involves processing. It's an act of processing, which involves recording, in the form of transaction. That's how I put it. I don't know if I'm right.
Okay. But are you a management student or accounting student?
Hello.
Are you a management student or accounting student?
Management student.
Oh, okay. All right. Yeah. So if you don't for anything, you mentioned process, you mentioned transaction, and these are all in accounting. So we cannot define accounting without talking about there's a process or an art of recording and classifying transactions. So at least it's good. Let's move on. So thank you for your effort. So yeah, accounting. You see, when you talk of now, you can mute your microphone. In most cases, when you talk about accounting, people call themselves accountant. Mike, mute your microphone for me.
Okay.
There is difference between there's a difference between accounting and bookkeeping. In most cases, some people call themselves that they are accountants. By natural sense, they are bookkeepers. So you have to know what bookkeeping is and what accounting so that you don't confuse yourself. But sometimes some people when they finish or even when you go to the senior high school, some people they are beggars. They collect receipt, school fees. You collect receipt, school fees, and I say you are accountant. No, for you to qualify to become accountant, there are a lot of things involved. Most people are just bookkeepers. So that's why bookkeeping. Bookkeeping is an aspect of accounting concerned with the recording of the business transaction. Dealing with the act of transaction, recording the transaction in a book or in a computerized system. That is bookkeeping. So you cannot do accounting without bookkeeping. Bookkeeping is a subset of accounting, but accounting go beyond just being bookkeeping. So somebody do accounting like at the university, you had degree in accounting, and you completed upon and say, and you have been employed, or you did business in senior high school, and you have been employed to sit. Yes, someone want to ask question. Yeah, Beatrice. Go ahead.
Okay, Doc. Thank you. Please, can we also call a person who record in a book as record keeper?
Record keeper.
Yeah.
You see, I thought record keeper, that one is so generic, general. It can be a storekeeper, a security man, or maybe somebody who is in charge of stores.
Okay.
Can be a record keeper. So maybe you have a warehouse. The person is recording the goods that the cargo bring. And some people who, when you issue materials to the warehouse or site, so he's in charge of the store. That one, he's keeping records. You know that. That's a records keeper. Somebody is
Okay.
in the school, a headmaster, or maybe an assistant headmaster, or maybe form master. He keep record. This is a student who are present. There's also a record keeper. So once you are recording and keeping, its record keeper is so generic. But when you use the word bookkeeper, it is specific to recording of accounting transactions, which they are
Okay.
expressed. Either if money is not involved, then it cannot be accounting information. So normally, when you say record keeper, that one is generic. It can apply to anybody who is keeping record or data for an organization. But when you use bookkeeping, that is more of accounting. So bookkeepers are people who record accounting of financial transactions. So when I say, oh, this person, oh, he's a bookkeeper, or that one, there's recording of accounting transaction. When you say accounting transaction, it means that the transaction you are recording, they are expressed in terms of what? Money. That's the underlying factor that you have to know. So when you hear the word bookkeeping, it is not just record keeper per se. Even though bookkeeping is a kind of record, but it is accounting transaction that is being recorded. Is that okay?
Yes, please. Thank you very much.
Good. So you see that when we talk of bookkeeper, anybody who is in charge of recording accounting transactions or business transactions without necessarily summarizing, analyzing, and interpreting and do so is not an accountant. It's not accounting, it is just a bookkeeper. So sometimes you complete SHS, then you are in charge of a supermarket. You are there as a salesperson and you have a big cash book where you are divided into two. All the sales that you make, you record on one side. When you go and buy anything, you record on other side. So you have purchases and sales. You are keeping financial data. That one is a bookkeeper. He is not going beyond just record, only recording of income and expense. That's all. So you are an you are a Benza at the senior high school. What do? You collect receipt, school fees, and give receipt. Then when the school is going to buy some food for the kitchen, you issue. So you are just doing what? Receiving of the school fees and also recording of expenses you are making. You can't say you are an accountant. You are just a bookkeeper. That is the technical term. So bookkeeping is just the recording, the act of recording of business transactions in book, either on computer or in book. That's bookkeeper. But when you say somebody is accountant or accounting, or somebody is accountant, chartered, then accounting go beyond just recording transaction. It has further activities such as summarizing. So accountant, they do the summary. They do the presentation. You meet AGM, annual general meeting. You need to explain the information. This is the sales. This is the expenses. We got a gross profit on this. This is the profit margin, the depreciation. So you see, you present the data for the shareholders to understand the economic information that you have presented as financial information. So accounting go beyond just mere bookkeeping. Bookkeepers, they just record without necessarily summarizing. They don't present information. They don't do any interpretation. They don't quantify the data. So when you are comparing the difference between accounting and bookkeeping, bookkeeping is a subset of accounting, but accounting is broader than just mere bookkeeping. So take note of that. You can read on that. So I have distinction between bookkeeping and accounting, and you can just look at the differences among them. Now, why accounting? Is accounting even important? Accounting have one main purpose. The major purpose or the overarching purpose, the main purpose of accounting, the main purpose of accounting I'm teaching online, but I have sent a revised version of your letter to you. So set that because somebody said there's a mistake in his name, so I corrected it. So this is it. With the one that I've sent to you. Which letter? The declaration one to the mistake was on it. Okay, I'm teaching, so let me further look at it. But why is that when you were saying the declaration, you didn't check that one? Like you have teaching, so you need to talk about that. Yeah. Okay. So that is the main purpose of accounting is to provide quantitative. When I say something is quantity, give numbers, figures. So accounting provides quantitative information, which is expressed in monetary terms for users to make economic decisions. So you see, when you hear something, oh, we're doing accounting, it's about money, it's about figures, it's quantitative information. So anytime we are doing, so when you say fundamental accounting, you know that we are trying to use numbers, calculation to communicate information for decision making. You see, users based on the financial information, accounting information to take decision. Some people buy shares in companies because of the accounting information that is put out there. So if, for example, Ghana Commercial Bank prepare their financial data, it's required that every company at the end of every year you publish your statement, income statement for the general public to see. So you see that you are paying dividends of 1 Ghana cedi per share. Somebody will go, hey, no, that is good. Then I have to invest. Then you go and buy 50,000 shares in your company, commercial bank. Thinking that at the end of the day, you declare a dividend because the quantitative information you have provided said that dividend payout was so much. So dividend per share is 1 cedi. So if I'm able to buy about 50,000 shares and you declare a dividend of 1 cedi per share, I have not done anywhere, but I can get money. These are some of the inform or the decisions that people make based on the financial data or the accounting information. People take economic decision as to whether I have to, I can invest in this company. Oh, this company is doing well, they always get profit. Let me go and buy share. Let me give them loan. Let me buy their debenture. All this information that people take as to whether even bank, if bank will give loans to companies, they look at the financial data, and that is the informed economic decision that we are talking about. So the main purpose of accounting is to provide quantitative information expressed in terms of money for users to make economic decisions. Apart from that generic or the overarching overall purpose, the other purpose, accounting information help to plan for future operations. Yes, something help us. We do budget, so we can do budget. We can prepare. Okay, this year it costs us so much to do this. Therefore, next year it's likely that things are going to be. You can budget for future activity because of the knowledge of accounting. Accounting also ensures efficient allocation of limited resources. You see, accounting will help us to know if we have an organization and we have department. Maybe we have departmental about 5 departments in one company. We can prepare each department activities for us to know which department the profits or loss coming from each department. And once we're able to do that, we can know that this company or this 3 department are giving the company more profit. And therefore, these 2 are not giving that. So we can decide that if there are resources, where do we put it more so we can get better option or return? So accounting help us to know that which department should be allocated more of the resources so that they can give us a maximum. And to meet legal requirement, it is required by companies code. In Ghana, it's by law that At the end of every year, if you're a company limited by share or a public limited company, you are mandated to prepare your financial report and display it, publish it for everybody to know, because people are bosses, shareholders and investors, potential investors, they want to know how the business is faring so that can decide as to whether they can do business with you or not. And when you are preparing the financial information, that's why we need qualified accountant, because the information you are going to prepare, that financial information, that accounting information can tell somebody. Somebody say, how can accounting information kill someone? Because you see, if you are prepared, you mislead people, you prepare and you falsify information, people can die actually, because maybe you are preparing information and say, in this company, we are getting loss, you have to get net loss, but you massage the data, you manipulate it to make profit and declaring, oh, we are profit so much, we are always getting profit, but in natural fact, the company is down. That's why some of the companies or some banks will collapse, because on the public domain, you might think that they are doing well, but when you go down and do forensic audit and see that, oh, they are almost liquidating or dying. So it's legal requirement that accountants or companies should present the information as it is, no lie. If the true state of affairs, let people know, so that people will take decisions as to whether some people invest, they put all their resources in the company, buy shares, buy debenture and bonds, but later they found out the company was just not good as it was represented on paper. And once you do that, people investment can go waste and they can even get shocked and die. And that's why you have to be very careful when you are dealing with. And also provide information from persons, machines, and other apps, other objects. It assists to be accountable for all activities of business, and it also enable managers of a firm to control business transactions. So these are some of the purposes or the reasons why we have to do accounting. Now there are some limitations of accounting. One of the limitations is that accounting information, because accounting deal with transactions that are expressed in terms of money, there can be some important information that cannot be expressed in terms of money, and that one may be lost because there's no you can't express in terms of money. So accounting information is expressed in monetary terms, but money as a unit of measurement is unstable. We know that inflation and other things. So that is one limitation, because everything about accounting is financial information. It's expressed in terms of, so money is a common denominator in accounting transaction. If the information is something that we cannot issue receipt, we cannot say it is 20 cedis, we cannot assign monetary value to it, no matter how important it, we can't see it, we don't record it. We record transactions that we can assign money or information figure to. That is what we mean by. So when you are talking about defining accounting, always remember that you have to talk about the fact that it is not any transaction that is recorded in accounting, but transaction that are expressed in terms of money. And one weakness or limitation of accounting information also is that it ignores transactions that are non-monetary or non-monetary in nature. So sometimes some information can be very, very important. Like for example, maybe in a particular year, the company workers, they work very hard. They were very efficient. They didn't waste material. They were always punctual. And because of that, productivity increased and the company was able to increase profit. Their profit margin has increased about 30% this particular year. This is a good news. This is efficiency of employee, punctuality, the very efficiency of the workers, hard work of employees. But I see, because we cannot quantify efficiency, we cannot quantify hard work of employee, like you cannot measure it in terms of money, you will not see this vital information in any accounting. Who trial balance and answer state of financial position say hard work of employee 200 Ghana cedis or efficiency of workers 100 cedis. No, it is something that we can quantify in terms of money. And therefore, though there is a very important positive information because it cannot be expressed in terms of money, we just ignore it. So you can read, and for these things, you can read that thing that I just want you to understand. I want to put definition, I want to put accounting in perspective for you to visualize and conceptualize the meaning of accounting. So, oh, okay, when we talk about accounting, this is what we are trying to. Then from there, we will very soon you zoom into the calculation. Because accounting is our calculation. I know somebody said accounting class, I have a wish accounting now. I feel to analysis or casa read as a management class. Madam, don't worry, okay. We will get there. But we have to, some of these things will inform the calculations that we'll be doing. So I have to try to understand, we need to understand. And therefore, when we are teaching, for ECC, we don't give anything, we just give it nothing but the best, you know that. So we want you to understand the concepts, the conception, so that when you stand somewhere and say, I have done accounting in UCC, you'll be able to speak to and you'll be able to explain things for someone. Say, yeah, this is a person who knows what he or she is talking about. How you are there? You are there. You are with me.
Yes, please.
Yeah.
Good. Are people
Yes, sir, we
joining?
are with you. We are following.
Coswell, now how many are you on the platform? Or now let's see. I hope by now people should be joining. We should have more people now. Let me see. How many people are-
About 20 something, sir.
21. Yeah, I see 21. I think that's not bad. That's not bad. Do you like the way I'm presenting the thing? You see, I've taken my time. I'm not going for this. If I'm to go or use lecture method, I'll go faster. But for the beginning today, you see, first impression always counts, right? The first impression, person become good because this is good. So I'm taking my time so that you don't insult me. I didn't know I can never be let's have a and teach you. Now, because I've taken, I don't want that. So I'm taking my time, but we will get to the conclusion very soon. So that's accounting. You can read on some of these things. Now, there are branches of accounting, and there are what you talk about accounting, we have financial accounting, we have management accounting, we have taxation, we have auditing, and we have cost accounting. These are the branches of accounting. So these ones we have why we are dealing with the cost is financial accounting. And we have what we call management accounting. Now, financial accounting, the difference between financial and management accounting. Management accounting is more for decision making. But financial accounting deal with financial statement, money, and past records to make decisions. So, in terms of definition, if you want to talk about what difference between management accounting and financial accounting is concerned with financial preparation of final reports such as income statement, statement of financial position, raising of finance and taxation. This is financial accounting. They deal with preparation, calculation of figures, the money aspect. That's dealing with money and declaring profit or loss, the value of assets and liabilities of a company, calculation of taxation. This is what we call financial. Finance, money is involved. And that's what we are doing. So fundamental accounting fall under financial accounting. But we have another branch of accounting called management accounting. Management. They also account, but it involves generating accounting information for use by management in carrying out management function, planning, organizing, directing, and controlling. So management accountants, their information is more for strategic decision making, not necessarily the money. But for example, they take a decision, they go for me, they have a call make or buy decision. Make or buy. Sometimes the management will face the situation that, oh, okay, there is a product that we have to do. We have the capacity, we can make it internally. If we are making it internally, we have to get raw material, we have to buy get labor, expenses, we need a storage, we need this, we need that. So they value all this and look at the cost involved in doing all those things. But there's also a ready-made product, the same standard on the market, but the cost is. So now here, management will take a decision whether you have to make or buy. They will just try to find the options, or if you are making it, the kind of the stress, the cost, the other thing that goes with the storage, and another thing. Should we make the product ourselves or we should buy from the market? These are managerial, these are strategic decisions. But the accountant will just say, okay, if you are buying raw material, how much did we buy this? So I heard the receipt. Okay, the receipt, that's what the deal sort document. It's about check and balances. That is accounting. Now, in terms of legal requirement, financial accounting is mandated, it's required by law that companies, limited liability companies, should publish their financial statement at the end of every year. Legal requirement. But management accounting information or management accounting, there is no legal requirement. It's optional. It is not. There's no law that requires management of a company to publish that. No, it's not legal requirement. But for financial, it's legal. So the kind I mentioned, financial accounting report on past information. Financial accounting, after the event has finished, past information, that's what they use to determine, how much was the sales? How much did we purchase this? It cost us so much. So financial accounting, before we can determine profit or loss, it means that the event has already passed. We have finished selling, we have finished the expenses, we have finished incurring the expenses, we have finished getting the income before you can now use those income and expenses to say, okay, if it cost us so much to buy this, and when we sold that item, we got this. If you subtract the cost of the assets or item from the money that you have gotten, the difference is the profit. Before you can do that, it's a past event. The things should happen. But management accounting information is for futuristic. Normally, it's based on future, what we are to do. So management accounting is mostly concerned with report based on future information. Future information, should we do something or not? If we increase salary by 5%, what will it be? What will be the effect on our cash outflow? So this is future, what will happen if we take certain action. That's about what management accounting information is about. See. Reporting frequency for financial accounting. Financial accounting reports activity semi-annually or annually, either 6 months or 1 year. For management accounting, they can do it daily, they can do it weekly, they can do it monthly, they can quarterly. There's no. So these are some of the distinction between financial accounting and management accounting. We have cost accounting too there, but this is what I am interested in. So you can read the rest. Now, don't forget that you write quiz and you write exams. Normally, the quiz are multiple choice, 20 multiple choice. And that one, this is why some of these things, the things I'm talking about, you see them in multiple choice. The multiple choice, you can see calculations, and you can also see normal ones like this. So when you are reading, then read those things. So now let's move a bit further. If you have questions on the basic, all that I'm doing, trying to define accounting for you to understand the dynamics of accounting before we go into the calculation itself. Yes, floor is open. Question, contribution, comment. You are welcome. Yes. Okay. Who has the sound? Yeah, Beatrice again. Beatrice.
Yes, Doc. Please, I want to add something to the difference between bookkeeping and accounting.
Sure.
Hello.
Go ahead. Go ahead.
Okay. So I want to add bookkeeping involves keeping detailed financial records of a company, earning and then expenses.
Okay.
And accounting, on the other side, uses information collected by the bookkeepers to help a company make financial decisions.
Okay, good. So the bookkeepers, they take the primary source, the primary or the first those data that they take. Then the financial accountant, they will depend, they will use the information recorded by the bookkeeper to do the analysis. Like, so sometimes the bookkeeper will just record everything, both sales, purchases, income, expenses, credit sales, cash sales, all mixed together in the book. That's a detailed information. But now the accountant will now sit down and do the classification. This is an asset. Even the assets, this is fixed assets or non-current assets. This one is a current. So this is a long-term liability. This is a current. This one is overheads. This is loss. This is gain. So that classification, the bookkeeper will not do. But you collect the detailed one then. So thank you for that contribution. Any other?
Okay.
I want to hear more voices. I want to hear people. Oh, cool. Me, I'll mention them too, so that's how I do. So let me go to the list.
Please, Doc.
Yes.
Please, may I know that the bookkeepers can we also call them account clerks?
Call them what? Account clerks.
Account clerks. Yes.
Yes, they are bookkeepers. Account clerks, they are bookkeepers. They are not accountants, but they record information which the accountant will use to make or prepare the. So they are all the account clerks. They are all bookkeepers. Are you okay?
Doc, thanks.
Yes. If you talk something, if you say something, let me see the name. I'll start mentioning.
I want to ask a question.
Ask.
You were saying that accountants at various institutions like schools, they are not accountants, and you
They are beggars.
even yeah, they are business, and even they act on behalf of accountant, they are still not accountants. Can I know the reason, even upon, because we know them as accountants, and maybe if you go to, you want to pay school fees, they say, go to the accountant, go and pay. I didn't know accountant. I want to know the difference.
Okay. Yeah, you see, we use it interchangeably. That's why we go. Either also we go to the Beza or go to the accounts clerk office, or maybe we have collectively call it accountant. Accountant in the mere father, but in Ghana. Company school, for you, yeah, me are my child didn't know. Yeah. So you see, that accountant for company school, for somebody to be called accountant, you must be a chartered accountant. That's the word. When you are company school. So most of these businesses they are not chartered accountants. Maybe after first degree you have done HND in accounting and you don't even qualify. Even at the university, when you do accounting, you are not account. You are accountant or chartered unless you charter. You are ICAG exam and you charter. That's what we call you are accountant. But we have accepted the terms like that. People do accountant. When the person even church a class or crampuna, and one we use kind of or no treasurer crowd also work or an accountant. Then you are just collecting money, that depositing and those things, paying so and so you are accountant. Do you know what it takes to become an accountant? Accountants are chartered. You have to, after your knowledge, you have to write the ICAG. This is a chartered accountant exam to charter before you can become an accountant. Even auditors, for you to become an auditor, not all accountants are auditors. Auditing a specialized form of accountant or accounting. So in law, in Ghana law, or in the book company's law, if you are not a chartered accountant, you cannot be an auditor. For you to become an auditor, first you need to be an accountant, chartered accountant. So yes, I understand what you are saying, but in the actual fact, when you say somebody is an accountant, that is what qualifies somebody to become an accountant. But you have been using the term accountant. Oh, go to accounts office. Go to accounts office. You see, that is accounts office. So go to accounts office to pay the bill. But we just say that the person who is in charge of accounts office, we don't see the person as an accountant. Just go to the account. But someone who is in business, some of us who know why we will, you see, we don't take that accountant to be accountant. That was the best thing is the bezer. Bezer, you disperse, you just receive the money also. So we find it difficult, but we have accepted like that. We know what you are trying to say, but that is not it. Asa, do you know what I'm saying? The person who has a question, are you there? So if I'm not saying that all school accountants are not or cannot be accountant. If a person is chartered and he's an accountant, that one is qualified. But I know that most times those that we call them accountant, they are not chartered accountant. We are just calling them accountant because maybe they are handling our finances for us and virtually say accountant. And I'm able I just have a film. That's what we do.
Yeah.
So, but in and now you are learning. This is a institution, so higher learning. So this is where you need to understand the real term. So that when you are teaching somebody, when you stand somewhere you are talking, you understand what. So sometimes people, those who know, you prefer to call some go to accounts clerk instead of the accountant or accounts officer, or maybe accounts officer, or the bearer, or the cashier, or the treasurer. These are the more fulfilling one for those who are dealing with money. But I want to say nowadays an accountant. We understand to be chartered accountant. I know what it is to be for someone to become chartered accountant. So that's it. Pastor, men call smoke punch your bears. Let me see when your accountant do. Let them chop the accountant. You get it? Let them turn that
Yeah,
into the accountant. But you and me, we know when we come to this class or when we meet and we are talking about accounting terminology, and talking about accountant, we know what accountant or who accountants are. Or the definition of accounting itself tells you that accounting involves the act of recording, classifying, analyzing, interpreting, and summarizing financial data that can be explained in terms of and communicating the result. So it involves a whole lot of things. The question is, those people that you are called accountants, do they go through all, they don't do all this and present information at the annual general meeting, or they just collect the money, issue receipts and expenses? That's all. Collecting information. That is. I hope you understand what I'm saying. Are you with me?
Yes, dog.
Okay.
Yeah, I'm here. We are
Yes,
here.
dog.
So now let's move. Okay. And I like the way you are active. You are asking questions. So I'll do a roll call. Sometimes when I come to class prepare, I'll ask questions. I look at the names, so I'm seeing names. So far only one lady Bakupena asked so far, Beatrice. But there are a lot of ladies here. The ladies, where are you? So I'll call somewhere random to say something. But before that, so all be on guard. Yes, somebody has been a Nico at the sharing coming who go, hey, that is me. Me, like if you do class, so I will do. You are looking at me some way. Now let's look at the conceptual framework of accounting. Now that we have at least understood some accounting, or you'll be able to define accounting, let's go for that. What's our conceptual framework? We are talking about under a conceptual framework, there are so many things that we talk about. How we call financial statement. In accounting, we do financial statement. What of financial statement in accounting? Financial statements are reports which provide financial information about the reporting entity. When we talk about reporting entity, we are talking about a company. Somebody's microphone is on. Who is that? The person whose microphone. Yes, you have off it. That's good. When we talk of financial statement in accounting, we are talking about information, data. So financial statements, they are reports. We provide financial information about the reporting entity and company. As our reporting entity, it is a company. So always in accounting, when you say reporting entity, I'm talking about it because of those who have not done accounting before. And yes, if you have all done accounting, there are certain things that I will not worry myself with. But because I know somebody say they're the first time, say, hey, then there are certain things I have to let, because these terminologies, if you have done accounting before, these are things that I'll just skip and go back. I have to. Reporting entity, you are talking about a company that is preparing the financial information. So financial information are reports which provide financial information about the reporting entity's assets. So in financial information, you can get information about your assets. You define assets, liabilities, equity, income, expenses. These things are contained in financial statement, which is useful to the user to assess the prospects for future net cash inflow and management stewardship of the entity's economic. So financial statement help us to measure. It helps us to know how much cash that the company or the entity generated. That we call inflow, what comes in, and also outflow, what went out. It also helps us to see management stewardship. For every company is entrusted in the hands of board or the board of directors or management, they are still the first of the company. The financial information will help us to assess the effectiveness of that management or that stewardship or that management, because we entrusted you with so much. We entrusted you with maybe so much, or with this, and at the end of the day, you have opened another branch. That's a positive. So when you present financial information, so over the year we had one branch here, but by the end the year ago we have been able to add 2 or 3. Then you are efficient. So that's what we do. The financial statement includes the financial statement that we are coming to prepare, and we will prepare all this one. You will prepare them. So you prepare. You have what we call statement of financial position. There's a current terminology now. In the olden days, we used to call it balance sheet, and nowadays balance sheet is outmoded. If you use balance sheet, so if you are a teacher in essence and you're using balance sheet, it means that you are old model, old fashioned. The correct terminology now, the current literature, statement of financial position. That's the balance sheet where we have assets and liabilities and capital. We use this information to prepare. Then we have statement of financial performance. That's another financial statement. So that's all financial statements. We have statement of financial position. We have statement of financial performance, which we used to call income statement, where we have the trading and profit and loss accounts. So we will look at all this. So we prepare trading, profit and loss account for you to. So these are part of the income statement. So when we talk of financial statement, they comprise statement of financial position, the statement of financial performance, then other statement and note, which disclose information about. So note the account is also part of the financial So note to the accounts, we call it note or disclosures. They are all part of the financial statement. So basically, when you talk of financial statement, we have statement of financial position, we have statement of financial performance, we have cash flow is there, then we have note to the account. But at this level, we limit ourselves to these statement of financial position and statement of financial performance and prepare some as to see. So now, gradually, we are going. We will zoom into the calculation very soon. So now let's take the first one, statement of financial position, which we normally call it balance sheet. So it used to be called balance sheet, but now it's better for you to use statement of financial position in short. So normally say statement of financial position. Now, the statement of financial position is prepared to ascertain the financial position of business. Now I say I feel around that child, but I'm really having fraud. So financial statement of financial position or the balance sheet is prepared to ascertain the financial position of a business as at a particular date. Please take note of this. Statement of financial position. We prepare it to ascertain the financial position of a company or of a business as at a particular date, meaning that we can prepare the statement of financial position today. We can prepare it tomorrow. At any particular date, we can prepare the statement of financial position because it deals with the company's assets, liabilities, and capital. Now, it also shows the assets, the liabilities, and equity, which we call the capital of a business as at a particular date. The element directly related to financial position or balance sheet are you have assets, liabilities, and equity. These are the three things that we use. So when I prepare statement of financial position, we need three things. We need to group all the assets. We need to group all the liabilities. And we need to also group the equity or capital. Once you are able to determine the values for these three items, your financial statement of financial position is prepared. So when you are preparing this statement of financial position, you need to get how much is the value of the assets to tie, how much is the value of the liabilities, and how much is the value of what the capital. Now, when I talk of assets, so we are starting right from beginning. We are starting. We are preparing. Now, assets for the benefit of those who have never done accounting before. When I talk of something, be an asset. Assets are properties, or I'm simplifying it. You had the material, so you take your time and read it. Assets are properties or resources of any organization or any person from which that person use that particular thing that you are calling asset to generate income. Anything that you can use or it helps you, whether you're a company, whether you're an individual, or whether you are whatever in the house, or once you use it, that thing help you or use it in generating income, then that thing is an asset to you. So when you go to a house, if you have a car and you use the car you use it to go to office and come, and It is an asset. It's a property. So assets are properties or resources of organization that organization use in generating income. That is asset. So if that is the case, let me find out from you. If assets are all property, I'm coming to call somebody to say something. If assets are all resources and property that an organization use in generating income, then I want you to mention about 3 assets that of a company that you can tell me. Yes, who want to say something? Or I should mention the names.
I say,
Random. Yes.
hey, those assets are your land, motor van.
Uh-huh.
So the land is where you establish your business. Yeah.
Okay.
And then your motor van,
Okay.
the furniture, they
Okay.
are all your assets.
Good. So you see that when you talk of assets, so because of time and Latin, I'm just summarizing this. You can read them. These are not difficult concepts for you to. As all resources, property, so vehicle, building, land, even when you come to the furniture, anything that you use in the company that help you to do your activity is asset. But the assets we can have what we call classification. This is where classification comes in. We have generic definition that assets are all resources that the company use or property that the company use in generating income. But the assets can be classified. We have different classifications. We have what we call non-current assets, which people or which used to be called fixed assets. We have a current asset. Some of the assets are non-current. When you say something is non-current, it means that it is an asset, all those assets, properties, and resources that can be used for more than 1 year in a business is a non-current asset or a fixed asset. So when you talk of assets, all properties or resources that the organization use for more than 1 year, 12, if the assets can last for more than 1 year, then it's a fixed asset or it's a non-current asset. So let's assume a company has a laptop. A laptop is an asset. They use it in generating income. They use it in the business. But laptop can go for more than 1 year in the business. So it's a non-current asset. Furniture, non-current asset. Building, land, premises, motor vehicle. So you cannot think of a lot of what? Non-current asset. That's why always people say, if your parents are why you are as you are growing, you're going to school, please don't try, learn hard. Don't come and be a liability on us, but be an asset. That means they want assets is beneficial. You get good thing from assets, but liabilities will cost you. Yeah. So we have current assets and non-current assets, and by extension, I say all assets that can. Yes, ask the question.
Please. So, can we classify human beings as assets too?
Yes, asset, human capital. So if you are an organization and you are so valuable to the organization, it's a resource. I say all resources, all properties that the organization can use. That so you have human resource, you have human capital, human resource. If a person is in an organization and is so instrumental, you can say, you are an asset to this organization. You know what I mean? That because you are helping the company to what get a lot of what information or not revenue. So we have human. If you are depending on the role that you play, but in more specific terms, if you are talking about properties, you know human beings are not properties. They are not items, right? So in more business sense, we are talking about assets. Human being asset like because you are so valuable, you are. But in terms of accounting, when you talk of assets, you are talking of properties and resources. And human resources is also there. So all resources that company use is part of it. So we have current assets and non-current. But you cannot say that human being is a non-current asset. It's not possible. So it has not fit in the item of let me say properties, things. Human being is not an item. Do you understand what I'm saying?
Yes, sir. Yes, please. I understand.
So that is it. So that is it. So we are now going to start something, do some a little calculation, very simple one. Now, if our first statement of financial position, which we call the balance sheet, it is prepared using sorry for the break. I'm back. Can you hear me?
Yes, please.
Yes, please.
Okay. So let me share the screen. I was talking about the fact that the, uh, okay. As I said, we are coming to prepare the statement of financial position, and I started some example that assuming you want to prepare a statement of financial position, and you have your assets, because you use the accounting equation in preparing the financial statement of financial position. So let's assume that you always say that we have an equation that assets is equal to capital. That's the first, so A equal to C. Meaning that if you want to start any business, so let's assume that I want to start this supermarket. This is my store. So this is me. Do you see the drawings I'm doing? Do you see them?
Yes, please.
Yes, dog.
So let's assume that
Yes, please. A equals to
okay,
C.
Good. Let's assume that I want to explain this A equal to C. Asset is always equal to capital. What it means is that if I want to start a business, the initial amount of money that I, as an owner, what I have for me is what you call capital. So whenever you hear the word capital, owner's equity, it is the initial amount. Nipa na person starting business, no, the personal amount, without borrowing, what's saving his own savings that he wants to use to start the business is what you call capital. So, for the accounting equation, total assets is always equal to capital. That is when the business that you want to establish is such a way that your finances, your personal money you have is enough to buy all the assets and everything. There is no need for you to borrow. So in that case, accounting equation is going to be asset is equal to capital straight away. So it means that when we take the business, the assets, the motor van, you bought a motor vehicle, you have rented a shop, the shop, the stores or the stock you have bought in it, you have a car, you have a table, furniture. The cost of the car plus the cost of the land, the total items that are in the store, the furniture, the generator, everything, the values. If you bought this 1,000, 500, 200, all the amount, the items you have, but they are all collectively called assets. A. Because motor vehicle, the stock, the building, the land, they are all assets. But they are things that you are coming to use to generate more revenue to yourself. But these assets that if you did not go and borrow any money anywhere, but you use your own personal funds, which we call capital, to buy all these items, it means that for this particular company, the accounting equation is that the assets that we see in the company, all the resources, I've already defined assets to you. All the resources, the car, the motor vehicle, the premises, the building, they are equal to, the assets are equal to the owner's capital. That is C. It means that the owner's personal money was able to buy or finance everything. In that situation, the accounting equation is equal to assets, the total assets of the company is equal to the owner's capital. That is the first original accounting equation. But sometimes you can see that the business you want to open is so huge that maybe you want to open a mall, very big, or supermarket. It will require something like, let's say you need 30,000 Ghana cedis to buy all the assets. So to buy the land, to buy the items, you need the vehicle, the furniture and the rest. It will require 30,000 to buy all the assets. But you, the owner, you have only 10,000 Ghana cedis as your personal money. 10,000. But you want to do this business. So what do? You need to go and look for the extra 20,000. So the extra 20,000, which is coming in, can come in so many forms. Either you go to the bank to borrow the 20,000. Either you go to a friend for a loan of 20,000. Wherever you get the 20,000, because the 20,000 is not your personal money, but your personal money is 10,000, then it becomes a liability. It's an obligation. When you talk about liability, liabilities are obligations that the company has to settle at a later date. And when you are settling that liability, it can cause an item or a cash to go out. So liabilities are obligations that the business has to settle. So you see that in this case, your accounting equation is going to be different because the total assets that you need to start a business or for you to do the business is all the assets will cost 30,000 Ghana cedis. This asset is equal to you, the owner. Your capital was the capital that you have was 10,000. And you see, you'll be able to buy all that, but the assets that you have bought, all of them, you have bought them. And it's not only your capital. Your capital is 10,000, so the assets is equal to owner's capital, which is the C, plus the L, which we call what? The liability, which is 20,000. So this is what we call accounting. So always, we can when we look at this particular business, all the assets in the business are financed by the owner's portion. This is capital plus the liability. So that's what we have here as accounting equation. So no one ask, what is accounting equation? So assets total is equal to capital plus liability. It is not always automatic that the liability will be part, but in most cases, liabilities are part because the owners are not able to raise all the resources. So that is the accounting equation. So now, if you are preparing a financial statement or financial position, always remember this, that the assets are always grouped at one side. The asset is always at one side. Then we compare the assets against what? The capital and liability. They're also one side. But the two should balance. In account, when I say something balance, it's equal. I know some people, you understand what balance is different. Balance means that then I check. We are not balancing. That's why people, but as an accountant or in accounting student, when something has balance, it means that they are equal. The left is equal to the right side. So that is a balance equation. So now let's start. I have simple illustration here. So this is what we call financial statement. So let's assume that there is Ben, my company, and this statement of financial position as at 31st December 2022. So this my company and this is my financial. So this information here, we are prepared using the accounting equation. So all this that you see here from here up to here, all this. Have you seen the one I'm circling? Have you seen them?
The current assets and the non-current
Good.
assets.
All these are what we call the assets. This portion. So you see that whether they are current or not, they are all put together as an asset. But in your presentation, as an accountant, you should be able to do the classification. So you see that though they are all assets, and we are using the equation. Yeah, don't forget that we are using accounting equation, which is asset is equal to capital liability. This is what we are using to prepare the financial position. So you need to look at the total assets at one side. So look at it. Even though they say non-current asset, non-current asset. What are non-current assets? Then why did I say non-current assets are? Somebody's microphone is giving that. Yes, the person who has raised their hands can talk.
Non-current assets are properties and resources that can be used for more than a year.
Good. Once the asset can be used more than, so you see when you go to some company, even stapler machine, they count it as a non-current asset. Stapler, because it can be there for so many years and they use it. So any asset or property that can be used for more than 1 year and still be using the business is non-current. But those that are consumed, that cannot go beyond 1 year, they are what we call the current assets. So when you are preparing a financial statement, you have to group it. The asset, don't put all the assets together like that. Show us which of these assets are non-current, which are current. So you see that we have non-current asset at the title. Building. So if you have the building, you put the building figure here. And you see that there are some CD signs. They are not there for anytime you are preparing. Make sure that when I ask you to prepare, I can give you work to do. I'll miss all the assets and liabilities and capital. I will ask you to use accounting equation to present or prepare a statement of financial position for this particular person. In that case, you have to do something like this. So you have to state of financial position as at a particular day. Date is very, very important. Then your CD sign, see Ghana cities, you create column for 1, 2, it can be 3, but in most cases, 2 columns are okay enough. So when you have 2 columns like this, normally if the items are more than 1, you lay down and the total you push it to the end. So you see that here, non-current assets. Yes, ask your question.
So please, can you also say that the materials that are not meant for resale?
Which one? Come again, say what?
Hello, sir.
Come again.
Hello.
Yeah, I can hear you, but I want you to say what you said again. Your question again.
I said, can you also say that non-current assets are materials that are not meant for resale?
Oh, okay. But okay, I heard you. I get it. You are saying that. Can you also say that non-current assets are material that are not meant for what? Resale?
Yes, please. But they are meant to produce goods and services.
Okay. That is not correct. If you say they are non-current assets are those assets that are not meant for resale. So if you go and buy something like stock for the house to use, or you go and buy some item, maybe you go and buy item for use in the house, and you are not going to sell them, and you say that maybe the thing cannot go beyond 1 year, and you say because you don't have commercial motive for selling it, and it become a non-current asset. No, for non-current asset, we use the duration and the internal purpose of the business. If the thing is a property that the business is using to generate income. I get your point. In the sense that when the non-current assets that you buy them, you are not selling it. You are using it for the use of the business. But if you say items that are not meant for resale, they can be current assets which are not for resale. Do you get a point?
Yes.
For us to qualify it more, it is better we use the period, the year it is used to qualify. Good. So I'm doing it because of those who have never done accounting before. So when you are prepared, you see that non-current assets, then you list all of them, build them. So they have building of 4,500. Furniture, 2001. So these are the two non-current assets among their assets. So you add the 1,500 to the 2,100. The total, when you underline it like this, then you are summing them. So this plus this, then you get. So this is the total non-current asset. This is how we do accounting. Every accountant knows. So when we pick like this, we know that okay, what you are trying to do is that the non-current that they have building, they have furniture, the two put together is this. So when we are marking, this is how we look at it. You can't just put everything together like that. Now, when you fill, then another heading, current assets, inventory, which or stock. Inventory is a current asset. Treasury bill is also a current asset. Receivables or debtors, current assets. Bank, current assets. Cash, current assets. So this one, once you list item and you underline, then you are summing them. That's the meaning. So now you add all this together. This is also the total current asset. So now you see that for the asset, we have non-current asset of 6,600. We have current asset of what? 16,830. So the total asset of the company is what? This non-current assets plus the current. You can put them together. And now it becomes very simple that, okay, when auditors or you look at it, you can say, oh, this is the total fixed assets or non-current assets. They have current assets of so much. Now when you put this on the total asset of the company. So now this 23,000, this is total, the total asset. This 23,430 is the total asset, this one. So the total asset of the company is 23,430. That is both current and non-current. How were these assets financed? How did the owner Ben got money, or where did you get the money to buy all these assets? Is it like the asset you use your own money or you borrow? So that's why I say finance by. How did you finance this thing? So the total asset. So now we have gotten the A. This A is where we have gotten at 23,430. And this 23,400 should be equal to the capital, which is the equity. So in this question, the equity or the owner capital was 10,500. So you see, it means that the owner's personal money was 10,500. But it's not enough to buy all these assets. It means that there was something. The owner is saying that there was 10,500 my personal money. And for the operation I did last year, there was a net profit of 3,000 this one. When you add it to this one, so that still you are not getting it. When you add this and this, there was a drawings of 1,005. So you are getting the net equity to be there. Then you add a long-term liability. See, there's what we call liability. Long-term loan. And he went for a loan of 2,100. And there was also a current liability, payables 900. So the long-term and the current liability, when you put everything together, you are getting 11,000 as liability. So when you add the liabilities to this one, the equity, then you see that you are getting 2,000, 23,004. So you see that the assets should always be equal to your capital plus your liabilities. Assets, total assets is always equal to capital plus liability. Please, how we are following small.
Yes, please.
Yes, please.
I'm
Yes, sir,
trying
we
to
are
make the
following
account.
small.
Yes, you will get there. I want to. So all this thing that you see here, just read to just a minute. I've explained this information as I'm talking. I've explained them for you. Okay. So read through. Okay. Just a minute. Just a minute. Mimi, I'll come to you. I'll see that your hands is up. I'm coming to call you very soon. There wait. Okay. Is it Mame Kwabia?
Yes, please.
Mame Kwa. Okay. Go ahead. Ask your question.
Please, can there be a statement of financial position that they will ask you to prepare only the assets equal to the capital without the liability?
Yes, it's possible. It's possible. So it depends. You see, it depends on the information that you get. I can give you information to prepare the statement of financial position. You see that the assets will be equal to the capital without any liability in it. Yes, it's possible. And sometimes we can give information where the assets would not be equal to the capital, but you have to add the liabilities So you can get information like that. That's why I'm saying accounting equation is always, we have two versions. We can have one where assets can be equal to capital, and that's where the owner did not borrow anything from anybody. And you can also have a situation whereby the assets will be equal to capital plus the liability. So you can get something like that. Are you okay?
All right, thank you. Yes,
So,
please.
when you talk of current asset, the fixed assets or the non-current assets, we have already established that non-current assets are those resources which are acquired for retention in the business and not meant for resale. That is there. But in more specific sense, we are talking about assets that are used for more than one financial year. Now, this resale that we have here sometimes can confuse people for them to say, okay, if I buy a stock or you go and buy materials, and that material we are not going to resell them. We are not going to sell them. But so far as a stock or stock of yam in our shop, we are not going to sell them. Does that make them a fixed or non-current assets? Because it cannot go beyond more than 1 year. So normally, if you really understand what you are doing, this item we have here, you are talking about the fact that the non-current asset normally we don't have the intention of selling to other, but we have the main purpose that you are using it for generation of what? Income. So we have what we call tangible and even intangible. That is the non-current asset. There are some we can see and touch, and there are some we cannot see and touch. Those assets that we can see and touch are called tangible non-current assets. So when you say fixed assets can be covered as tangible and intangible. There are some assets we can see and touch, like motor vehicle, buildings, and the rest. They are all tangible. But we have other intangible assets which we cannot see and touch, but they are also assets which help the company to generate income. We have assets like patent, copyright, lease, and the rest. They are all intangible, but they are what? Assets. So that's why we say that the example of tangible non-current assets, we have motor vehicle, we have furniture, we have buildings, plant and machine. All these are things that we can see and touch. So they are tangible and they are non-current assets. They can go beyond more than one accounting year, and the purpose is not to sell them, but to use them to generate income, which can be used for more than 1 year. Then the intangible non-current assets we are talking about, they do not have physical existence. They are rights attached to assets. Example, we have goodwill, copyright, patent, lease. All these are also part of the non-current assets. So when you talk of total non-current assets, it should go to tangible non-current assets plus intangible non-current assets, and that will give you the total non-current asset. So let's look at this simple illustration here. So you see that here, you have something like calculate the total non-current asset using the following information. So you see that we have this simple data here, which we have the motor van, copyright, furniture, land and building, goodwill. We say calculate the total what? Non-current assets using the following. So here, if we are to do it, we have to group them into tangible and non-tangible. They are all non-current assets. All the assets here, they are all non-current. Motor vehicle is non-current. Copyright is non-current, but only that it is intangible non-current. So you have to just show us that they are all current, non-current, but you have to group them. So you see, total non-current assets go to total tangible non-current plus intangible. So non-current assets show us the intangible non-current assets. So goodwill is one, copyright. These are the two. So when you put these two together, you are getting total of what? 18,000. Be the total non-current, the intangible non-current asset. Then show us the total heading, total current non-current assets, tangible non-current, those that we can see and touch. Building, land and building is one. Motor vehicle is one. Furniture. Don't forget, these details are coming from, they are all in the question. We just total all this one too. That will also give you this. So now to answer the question, it is the intangible non-current plus the tangible non-current, and that will give you the total current non-current assets to this. Very simple. Counting our principles and procedures. Are they is it difficult? Say maybe is it so difficult? Yes, let me hear it.
Oh,
How is it's not difficult.
so it's okay. If you continue like this,
Say yeah, no, no.
we'll have it. It's difficult.
I like that word. So see how the man, yeah. Nka enye mu.
Say yeah, no, no.
Yeah. See how the man, yeah. Oh, see how the man, see how the man. Don't worry. Okay. So let's continue. So that is the so you can calculate it without any if you just understand that oh this is total. Let's add it. Yes. Add the question. Someone want to ask a question. Let me see. I thought okay. I thought somebody raised their hand. Okay, let's move on. Okay. The same thing applies to current assets. So you use the same idea to go and do the current. I'll not waste time on this one. Total current, for current assets too, we have non-current, I say total assets. So you see, we have current assets and we have non-current assets. We have that with that for the non-current assets. And that was the after non-current, we have tangible and intangible. But when it comes to current assets, we don't have intangible current assets and tangible current. No. For current assets, you have only current assets. So what we can ask you to calculate is total assets. You see the word total assets. If you have to calculate total assets, it means that we want you to calculate, get a total non-current asset. And don't forget that this total non-current asset, we can have two. We can have a tangible non-current asset, and we have intangible non-current. So if you want this total non-current asset can have two, tangible non-current and intangible plus current assets. So the three will give you, so we can give information like this to prepare a total asset. But here you have to tell us which of these information is total tangible non-current, intangible non-current, and current, and that's how you prepare it like this. So you see that here, when you take the information and you group them well, you are going to get something like it has a non-current assets under that. Our non-current, this is the intangible. So here, this intangible non-current patent is an intangible. This tangible non-current grant is also tangible. So you see that when we put these three together, you are getting the total non-current assets to be 26,200. Now, come to the current assets. This is current assets. So we have inventory, we have receivables, we have treasury bill, we have cash, and cash equivalent. So when you put this one together, you have a current asset of this. So to get your total asset, when you get your total asset, you are talking about both current and non-current. You are talking about both tangible and intangible, everything, all your assets together. Then you put it together and you get it. But don't forget, when we are defining accounting involves classification, or analyze, and that's why even though they are all assets, we cannot put everything together straight away total 34,000. Show the class. Let us know. So when you go for the presentation of the information at the annual general meeting, the users, which are the shareholders, they understand, they see, oh, okay, so these are the value of our non-current, our building and this thing. This is how much we have. Oh, okay. These are the current assets. So okay. So they will be able to know even this amount, which are the tangible, and this, all these things are clearly spread out. And that is what we say we are doing accounting, classifying transactions. These things, bookkeepers don't do this. They don't do the classification. These are record information. The accountant will now go deeper and try to classify them into tangible, non-tangible, and the rest. That is why you say you are doing accounting. As for liability, we have talked about it. Liabilities are obligations, and you know the settlement of it will cause an outflow of something. So you have a lot of liabilities, debenture loans, payables, bank overdraft, they are all expenses owed, they are all liability. Liability is any obligation that a business has to settle for liability. So yeah, current liability, like how you do for I have the slide. We can go through and this is what equity, capital is capital. Capital is the owner's own money that you use to start a business. So you can use accounting information. So when you are there, you can try this one. So you see that you are using accounting information to prepare this one. So you have illustration. You have Momo had the following assets and liability: land and building, payables, grants, bank overdrafts, receivables, inventory, long-term loan. This one, and you'll be asked to prepare, maybe find a capital. So you see, because it's an equation, don't forget that we can also give you in exams or quiz. I can say if accounting equation is equal to A, asset equal capital plus liability. When you are given two of these, you can use to find the other. So sometimes we can give you some assets and give you some liabilities, and we say, what is the capital? So you have to make C the subject. So A minus L is equal to C. So you can find the capital if you know the assets and the liability. You can find the liabilities if you know assets and capital. So because it's equation, if you know two values, you can find the other. So here, you see that you have been given some assets, you have been given some liabilities, and you can be asked to find the capital by using the accounting equation. So you see that. Are you there?
Yes, sir.
Yes, sir, we are around.
Yes.
That's sometimes and I said, why quiet is too much? I want to see. Okay.
We are
So
listening.
now that Momo information you see here is a mixture of assets, liability, and the rest. But they didn't tell you that somebody Momo started or he had the following assets and liability. They didn't talk about his capital. So the capital is silent. They want us. But the question was you to find out how much is the capital that he started business with. Because that Momo is a business thing. So somebody called Momo had the following assets and liabilities. So it means that he has been able to buy certain assets and he has some liability obligations too. So what is his own personal money, equity, or capital that he contributed before starting? Or if he had these assets, well, look at the assets are not equal to the liabilities. So it means that he didn't use only the liability to acquire the asset, meaning that there was a capital. So that's why you're going to say that, okay, I know that asset is always equal to capital plus liability. Now in this question, I see that I have assets, I have liability, but I don't have, I have been asked to look for the capital. Then I will say assets minus the liabilities is equal to the equity or capital. So now you go and use this one to prepare your information. So in the next slide, you are going to look at, let's look for total asset. Once you get a total asset, you look for total liabilities in this and subtract from the answer is capital. That's how we do accounting. So, but you present it in terms of what? So look at capital is equal to assets minus liability. So how to prepare normal information of financial position. So you see, building, you need to determine the assets. You have plant, you have inventory, you have receivables. These are the assets. So you put all this together and you get 73,500. So our A has been determined. This is the total assets. A equal to this. Now we don't have the equity or the capital, but we have L. So the liabilities. So now we have the total assets. Now let's see the liabilities. So there should be a heading here. Liabilities should be here. Now the liabilities, you have 10,000, 8,000, you have 2,000, 5,000. These are all liabilities. So when you put the liabilities also together, you get a total of what? 43,000. Since the accounting equation says that capital is equal to assets minus liability, now you have your assets, your 73,500. You have liability of what? So subtract the liability. So once you put the figure into bracket like this, feel that it's negative, it makes it negative. We subtract 43,000 from 73,500. We are going to get the equity is the same as capital, owner's equity or owner's capital. When you subtract the asset liability from that, you see that you are getting 30,500 as the capital. And that is it. Very simple thing. So go and read more on that one. And I'll give you an assignment for you to do for me. Now, if you have a question, ask before we go to the next items. Yes. Go ahead.
Please, Doc, is it possible for the total liabilities to be greater than the total assets?
Total liabilities equal total assets.
Greater than. No, greater than.
Okay, greater than.
Yes, please.
So let's say that A is, let's say, 3,000. Then L liabilities, let's say 5,000. Is that what you're saying?
Yes, please.
Something like that. Now, what we can do, the accounting equation is not less than or greater. It's always equal sign, equal. It's equation. So you can say that asset is equal to liability. Can we have something like that? Is this one possible? Can we have
yes
A equal to liability?
Yes, please.
Yes.
What? How? Explain that to me. And what opinion would you have this accounting equation?
Please, Doc, it's a situation where all the monies used to start the business was borrowed from somebody else.
So, are you trying to say that somebody can, as a businessman,
Have intention to do a business,
A business and you don't have anything. Everything start from bank loan.
and yes, it's possible. At least you get to do something.
Is it something that is possible? I'm asking. I'm also asking a question. As a businessman,
It's possible.
want to do a business, and you yourself, you don't call everything. Your business is everything is from loan straight. Does it happen? Or can it happen that way? That is so. That's always the businessman have something small for his own saving before you ask something. Is it always like that? Let's discuss. Let's look at it. You answer the question. Yes,
Yes, please.
Rita. Let me hear from Rita.
Please, I think it's not possible.
Let me hear you.
It's not possible.
Why?
Like you are going into a business and you don't have anything, then you go in to borrow capital from someone. There's a saying that I will not. No one will lend you money. You don't have anything, and you want to start a business. Who will lend you money?
Nyame so bua na obo. Nyame bua na obo ano. So and now they say bibia. So are you trying to tell me that okay, let me take different view. Is there any other view or do you agree to what Rita said, or there can be a situation whereby you can start everything on loan? Yes, Prince.
So for me, I think it is possible. We can have a situation like that.
I hope this it
By
is possible. It's not
the
about possible, right? It is possible. Is it still possible? Prince, don't we continue. You said it is possible. Why? Prince, we are not hearing you. Reposition yourself. Well. Oh, Prince, your voice is very far from us.
I was saying
Yes.
that it is possible.
Okay.
Someone can start a business with the borrowed money. So it is possible. They are real situations like this. So it is possible.
Okay. So there are rare life. Yeah, Juliana. Let me hear from Juliana too. Juliana.
Yes, sir. Hello, sir.
Yes,
Yeah, it is possible that you can go in for a loan and then come and start a business, because maybe it's through that loan that you are going to use it to acquire your vehicle. You are going to use it to acquire your building. So it is possible. Thank you.
All right. Yes. It's possible. Some people sometimes, but it's not something that we encourage in business. Sometimes we have what we call you have not reached there, but since this is happening, let me just chip it in because after accounting, once you are saying we're doing accounting, everything is possible. There's something called gearing ratio. Okay, before that, let me hear somebody's view. Who that really hand? I thought I heard a noise. Okay. Now, it is possible there can be that, but sometimes it's risky. We have something called gearing ratio. Gearing. And the gearing ratio talk about debt to equity in any business. You have not reached there. When you're doing advanced accounting, you understand. The gearing ratio look at the outsider's influence in the business. If the gearing ratio is too high, people don't want to even do business and invest in your company because they know that outsiders' influence on the business is high because liabilities outweigh the equity. If all those you are owing or you borrow from them, if they all decide to collect their money from you today, or then your business collapse because all the things in the business are financed by liability. You didn't add anything. So yeah, but it is possible. It doesn't mean that it cannot happen. Sometimes, Master, put the business idea be about your area. You see, this is a reality, you know that to work. But the capital, you don't have anything. But you can go to the bank, present the proposal, big money, multi-billion, take it, invest, and boom, you are there. So I think that yes, you can have that situation where a businessman can go for a huge loan to start a business, but it is something that for performer it is not good for as a businessman. You understand? I'm saying two things. It is possible and it is not ideal situation. You don't envisage, but that does not mean that's not possible. It's possible. I hope it's clear. I've made it clear. Is it clear?
Yes, please.
Yes, please.
Yes, please.
Good.
It is clear.
Good. So now let's that question perhaps. Today we are just doing to that. We are not doing anything serious today. I'm just introducing you. Say and then say any BBS difficult to be right. Let it just we have class what we are doing with somebody class 1, your daughter and your children in class 1. They can even do what we are doing today. Or meet me at in areas be anywhere difficult. Wow. True, of course. True. Yeah, I was saying, I said, I don't want to. I said, oh, Carol. I said, we know be yes, Beatrice. I said, someone know. Was with me. Hey,
Look,
hey,
total asset is capital plus liability, and then capital is total assets minus liability. Do you have a formula for liability? So there's nothing like that.
hey, Beatrice, Tobias, wait. Let me write what you said so that we can see it well. Let me. Come again. You said if
Total assets is capital plus total liabilities.
If total
And then
total assets is equal to capital that is
plus liability equity, yes.
Like this. Okay.
Yes, plus liability.
So you see, so
yes, please.
Okay,
And then
continue.
equity or capital is equal
That
to
capital is equal to
total assets minus liability.
Assets minus liability.
Please, we have a formula for liability.
Do you have a formula
for liability?
You can have liability. Yes, you can have.
Yes,
you can have liability.
So
yeah,
I want to keep it. You see,
so which is be asset minus capital?
what my sister is now saying.
Wait, someone is helping us. Someone is helping us.
Yeah. What you wrote right now is a rare equation. So all the other equations will come out from how they will ask you the question.
Yes.
Yeah. So now, so the general equation is the capital plus liability. So
this is a general equation.
Yeah. So all other equations come out from the general equation, depending on how they ask you the question.
Exactly. So if I want you to find liability, I would say that,
Mm-hmm.
somebody has assets of so much and capital of this. So you would say, okay, then you just send the C here, assets minus capital equal liability. If I want you to find the total liability, I would say somebody have a capital of so much and an asset of so much. What is the liability? Then you now, so you see, it change of subject. Any of the three variables can be found, or you can find any of the three variables provided that you know two. Do you get it?
Yes, please.
Huh. So you can find any of them. So if you want to find liability, this is a general liability alone is equal to assets minus capital. It's equal to liability. That is it. Okay. So let's now look at there are some of the things. It's just I thought this one is a trading profit, and we will come to this one later. But for now, go and read on some of the income. Income, there are increases in assets or decreases in liability. So go and read. When you talk about income, by now at this level, you cannot tell me that even if you are not accounting, you are not that accounting, you can't tell me I don't know what income is, or you don't know what an expense is, or revenue. So income, revenue, gains, they all bring resources, they all bring inflow into organization. But normally they use income or revenue for reoccurring transactions. They come very like sales, it's revenue or it's income. That something that comes as a normal course of dealing. But something like gain is something that is also it bringing inflow. It's an income, but it's something that is like a windfall. It doesn't happen frequently. As well, diluted. So you see, gains are incidentals as a result of carrying out a major activity. Examples of gains are bad debt recovery. It's not something that normally happens. Profit on the sale of disposal, discount received. These are all gains. They are income. They bring in inflow to the company, but it's not something that are real. Okay, it's occasional that you get one. That is what I mean by gain. But when you say something is a revenue, they arise a normal course of your ordinary activities, the income that you get. They are normally called revenue. So they are all income. So this is how you measure income. Right. So then each corresponding expenses. So expenses to we have the same thing as we have them the expenses. So we have expenses. Example of expenses. The difference between expenses is a normal cost of your doing those costs that you incur as a result they are all expenses. But we have something like losses. We go with what gain. So there are also things that are not normally happen. As a businessman, we expect that you get profit always. And sometimes it can be loss on disposal of these assets and those things. So that is also like gain. So normally we have gains go with losses. Either you gain or you lose. Revenue and sales. So this thing you can go and read more on this one. And I have given the slide to you. So you'll be able to group the revenue and the rest. And this one, if you want to determine profit or loss or expenses, income that you generate, you subtract all expenses from the income and you get what? Your profit. So for example, when you look at this information here, see the following information related to Asper Limited, repairs and maintenance. This is an expenditure. Expense. Sales revenue is an income. Bad debt is an expense. Property rate is an expense. Discount allowed is an expense. Electricity expense. Interest received, this is a gain. Discount received It's also a gain. Then determine the net income. So all you need to do is go and total all the income, both gains and revenue together. So you see that here. When you come here, you have income. So we have the income as well. Sales revenue, the interest received, the discount received. These three, when you put it together, you are getting what? The total income. Total income is this. Less the expenses. The expenses you have repairs, properties, electricity, discount allowed, bad debt. You add all of them, you get expenses to be this. So if you have total revenue of 100,000, I have expenses of 395, and when you subtract the expenses from the income, then you are getting net income of 5,000. Very simple. That very class one. This one means P1 neutral, which means very simple. There's nothing difficult here. It's just about application of principles, and you are there. How we are there. So, like I said, we have to, yes, because of the time, yes, who has raised their hand? Yes, let me see. Rita.
Please, I thought you said when you were subtracting amounts from a certain amount, it should be in brackets.
Yes.
But this one, I don't see the brackets.
Now, you see there are two things. One, you are recording, or you are recording the item. Anytime you are subtracting, you have to. So this one, this is the total income. This one is bracketed income, but it's supposed to be like this. Like this. Or you can write less. The way you write less, if you write the word less here, repairs, there that one you don't put into brackets. This one was omission. So it's supposed to be here. Like this. I'll correct that. Thank you for that. I will understand that. Now, always when we are subtracting, we put into brackets and you subtract. This acquisitions to income. Just read on that one. I'm not interested in this one. What I'm interested in. Let me. So just read on the approaches to income. After approaches to income, let me talk briefly about it, because somebody will say, I've skipped that one. There's the repairs and the expenses income. This for approaches to income. There are income measurement. You can measure income from some perspective. People who say, have you gotten income, profit or loss? It's not always that expenses can help us to get the income. So you see that we have different approaches. So we have one of the assets and liabilities approach. You can use assets and liability to determine the income. That is, if there's a change in the assets, so the accounting equation is assets equal capital plus liability. It's established for all computations. So let's see. Now you see that in the beginning, when somebody was starting, Owner Limited had the following assets at the beginning. So look at it. The assets, you have these assets, and you have payables of so much. At the end, so look at from here. At the beginning of the year, land, 25,000. Payables, liability, 10,000. Plant, 17,000. Bank overdraft and receivable debtors. Inventory, long-term loan. This is the beginning information. At the beginning of the year, I was having, owner was having this information as assets and liabilities at the beginning of the year from here. But at the end of the year 2022, the following were the assets and liabilities. So what you have to do is that you can determine profit or loss from using the assets approach, assets and liability approach. So all that you have to do is that because we say that assets is equal to capital plus liability, you can find capital, opening capital and closing capital. If the closing capital has increased more than the opening capital, the difference is the income or the profit that the person was able to get over the year. So you can determine profit or loss without using expenses. You can use assets and liability. That's what I mean by asset and liability approach to measurement, how to measure income, whether you are getting profit or not. So look at something here. Watch. See that statement of financial position. So here, as at January 1st, look at the date. So if you want to know whether you are getting profit or loss, and they want you to use only assets and liability and capital to do that, no expenses, then first thing is prepare a statement of financial position as at 1st January 2022. So the beginning of 1st January 2022, this is the state of affairs. You prepare, you can find your opening capital. So land, you see the information we have been given 2 sets. In the beginning of 2022, that is the 3rd January 2022, Owner Limited had the following assets and liabilities. So you see that the information up to here mean that they are all 3rd January 2022 up to here. All the information was 3rd January. Then at the end of the year, that's the 3rd December, these were also the information. So if you want to know whether there's income or profit over the year, all you need to do is that 3rd January, let's find the capital that was at hand, 3rd January. So to get a capital, you can it land and building. This is non-current asset. Plant, another non-current asset. Inventory is current assets. Receivable is current, but because we want to get the status of the company, so all these put together will be a total assets of the company. So you see, total assets of the company is this. Now liabilities, bank overdraft, long term, the total liabilities. As at the beginning, all this in January 1st, the liabilities too was what? This. So when you subtract the liabilities from the asset, opening capital, that means as at 1st January 2022, this is the
Good evening.
Pastor,
Charles, your name is on the tower.
hey, Alice, your microphone is on, oh, Alice. Alice, your microphone is on. So you see that we have total assets. So now the asset minus liability is giving us capital. We are using accounting equation. Asset minus liability is equal to capital. So here our assets is 73, 75, and then liability is 43. So you put 43 here. You subtract, you get capital. So opening capital is 30,500. And that's a 1st January list. Then you go and prepare the same, you use the same format to prepare at the end of the year. What were the capital at the end? So you see, now you're going to use it at the end of the year, 31st December information. The same building was this, the values have changed. Then they had machinery this time, then the inventory, then this time at the end they say they have cash. So what is the total assets? So you total the assets and see that at the end of the period they have 80,000. What is the liability at the end of the year? So you total the liabilities to compare that one, subtract the liability at the end from the asset at the end. You are getting 50,000. So you see the opening capital for the assets and liability given opening capital. You started January 1st, 2002 with opening capital of 30,500. Then as at the end of the year, 31st December, 31st, 1 year per 12 months. When we look at your assets and liabilities now, we compare your capital is now has shot to yes. So from 30,500 that you started with 1st January. Now you are getting this. So the difference between the opening capital and the closing capital is what we call the profit for the year. So you can determine profit without necessarily using expenses and income, but still assets and liabilities. That is how. Is that okay?
Yes, sir. Yes, sir.
Yes. Are you tired? You are tired. Some of you. Yes.
My
Too
my
tired,
battery is
too
running
tired.
low.
I want to. I'll end here because now that we are going to another level where users of accounting information and their information need is also another area. It's not calculation, but you need to understand it very well here. So, in our next meeting, I'll use a few minutes talk about users of accounting information and their information need before I introduce you to the next thing. So you have these slides. Go to so that well, I know some people are even insulting me right now. I know if I look at your faces, some people they are calling you. Your husbands are calling, come and sleep, and you are doing lesson. Listen, some are insulting me that which lecturer is putting this lesson here in the night. By now, Kawada, and I may have I mean, say I know student. I know, pa. Obi me attend when you say na we dey na June best side. Sabre, obi kra kawada. Na then I can read your mind. Do me attempt. Yeah, then. We don't find them. Dear. I'm on for guests. I'm on for husband. Hey, do me attempt. Tell me, Mr. Munkwada. Oh, interesting. Okay, so you just go over the things that we have done today. That we will. This is just the beginning. We have so many times, and like I said, when we start the regular creation, a time will come. Even when we meet Saturday morning, I may occasionally call for a weekday lecture like this. Maybe once every Wednesday, or then we do one of this. Just cover that one. I'll do my normal Saturday, but sometimes we have to be maybe in the evening like this. We chip in one so have to cover some of the things. Is that okay?
Okay. Yes,
All
sir.
right. Okay. Thank you very much for your time and your cooperation. I think we can end it today. Yeah, I like the emojis. And I have seen one lady is smiling. Say, who is that? I wish I can, because the way she is smiling. When you Beatrice, Anna. Friend, husband, you me dim at them. And I do it. My husband, why?
Let me show. So,
Okay.
you know, this time. This time.
Okay, boy, next week.
Yeah, that's a good night.
Good night. Bye.
Bye.
Bye, boss.
Hello, Mark. Hello, Mark. Abigail, Augustina. Was there any food? This food is it's for to your people. Mm. You have patience. They have not opened. You know, like you've done it. Okay. You know, I need to get help of them. So, you know, not that I'm not pushing. This is what they are called even on that lady stuff. He said they said they'll get back. And then see, said so he said he gave him an ultimatum. Ultimatum means that let it be so, let it be that day. Ultimatum, like make sure it happens. Give them Friday, last week Friday, and today Monday, that you hear from that he should hear from them at the close of the day. But looking at this, I was doing this and I know if something has happened, like by the he will call. So this is the message he sent in the morning. So that's what I can do. He gave me Friday. He gave them Friday. I'll be getting it. And you are in hurry. No, it is not something I can just easily go and fetch. You have to have patience, get it done. I hope you are getting it so that your mind will tell you. It's not on the shelf for me to just go there and pick it. You can understand what is happening. So we have to get a little patience. You ask me patience to win, but I'm not the final know what I'm doing about it. Because this you can't put pressure on me, you can't put pressure. I gave you we got so many areas. When I ask you no, when I ask you no, when I ask you no, you yourself you can attest to it. So you have to give me time to get this thing done. Your brain should also tell you that I gave you this, I gave you that, I gave you that. Or you cancel them. Since you have cancelled them and we are looking for something, there will not be too much pressure on me or on yourself. You have to bow down with patiently, see what will happen. So don't put pressure on yourself. Definitely you go to school, but it will delay a little. So we get what we are looking for. But if I were to know that you are in a hurry, would have accepted anything at all that came on out because they are all secondary schools. I hope you are getting it so that you yourself will understand what you are doing. If you don't get it, then it looks as if there's something wrong with your brain if you don't get it. Because we got opportunity. I asked you in that this one I don't like it. And so the one you are looking for couldn't come on time or it's delaying. Then you have to also get patience alongside. I hope you understand my point here. So that's how it is. Not that we didn't get opportunity, we got some. But you brushed all those things. You have to get patient. You hold on. I hope you understand. So